Hi, my name is Reese Bailey. I represent Aesthetics by P. Brown. In part five of our personal financial management uh, series is managing cash and savings. Cash management deals with routine day-to-day uses of your funds. These are liquid assets. They're on demand, and you can get them from your checking or cash or whatever. Liquid assets consist of cash and other assets which can be readily converted into cash uh, with little or no value in time. Examples of liquid assets include cash, checking accounts, savings accounts of some sorts, money market deposit accounts, money market mutual funds, US Treasury bills. These are things that are matured, these bills and funds, and you can cash them in for cash. Purpose of liquid assets is to make purchases. You want fast money, pay bills, pay incidentals and unexpected uh, things. You want to meet reoccurring living expenses. And that's all of these is where you would strictly want to stick to your budget and make sure that everything is covered. You want to provide reserves for unexpected expenses. So you never want to spend the last dollar in your budget or in your account because there may be something that you forget about or that some fee or the government puts in there or something that will be unexpected and you'll end up paying an overdraft or a fee or something of that nature. You want to use these liquid assets uh, temporarily to accumulate funds for long-term financial goals. So if you do have uh, funds left over at the end of the month, you don't have to go out and spend it. You could put it in your checking, you could put it in your family emergency fund, and just really accelerate the pace at which you will achieve your financial goals in the future. Budgets are something that we really want to rely on and get used to and be able to use them as though they're second nature. Budgets will tell you, as in this case, uh, about the balances that you have. Uh, Projected, you can put in a projected amount, and then when you actually pay the bills or something actually has to be paid, then you could put in the actual amount, and you could see whether if your projected amount is more than what you actually pay out, you should have a balance. It gives you the totals for the projected cost, totals for the actual cost. You can put in all your income sources on these budgets, and that'll be deducted as you make purchases and payments and use your funds. So budgets are really something that we really want to stick with. That was the monthly budget that I should have just showed you. Here's the personal budget. So you can take those monthly budgets and turn around and plug in the monthly amount. We're into April right now, so this one is due. We gone through January, February, March, and that was my costs and my totals. And now I'm putting in, I hadn't put in April yet because we're not there yet. And here so far this year is how much all my wages have been, all my dividend, all my different incomes, and this is my home expenses, and this is my daily expenses for living, including groceries and things like that, and transportation costs are plugged in, entertainment costs, and so forth. So you have a lot of options there. Very easy to plug these funds in once a month. And at the end of the year, you don't have to guess about it. You can look at it, see exactly where your money went to, and which of those may provide you some relief during tax season, some credits for tax write-offs and so forth. And you can also, maintain your retirement savings calculator and glance at that once in a while just to give you some encouragement as you see the your funding increase and accelerate in increasing. If you're trying to save up to buy a car or a house, you can use these home and auto calculators. This is the general loan information that you can plug in. If you go to a car dealership and you're trying to figure out if they're giving you a good deal or not, because you would be simply amazed, or maybe you wouldn't, as to how slick car salespersons and their tactics that they use. And it's even been rumored that they use well, it's not a rumor, that they use Microsoft Excel spreadsheets also, and different other software that's customized for their business. And they have secret formulas in there. They'll tell you 6%, but actually inside the sales they have formulas that include a little bit. And many big businesses like Walmart and everybody else does this, which is, but you can calculate exactly how much you're paying. If you're buying a car for $30,000 and you're paying a certain amount for 72 months, and they'll tell you one amount, which will be probably more than when you put it in your own calculator. But you can do that, put in the amounts, and then you can put, the monthly amount, the interest rate, then it will tell you the total of the loan, what the loan should be, and the cost of the loan. Because in this case, you're paying the interest, you're not getting the interest since you're buying something. And these are two examples of what you would want to use consumer loans to purchase. And these are items that should well outlast the loan. So the use life of the car and the home is usually, you get those paid off and you still got a good product there, and the loan's gone away. Especially when you double up payments and do some of the things that accelerate this process. Okay, that's the end of our managing cash and savings. Have a good day.